Introducing the 3-part options course with Hans Albrecht. Get access for free by scanning this QR code or clicking on the link in the description.
Hey, greetings, and thank you for joining us. It's Macro to Micro Options Power Hour. I'm Samantha LaDuc, founder of LaDucTrading.com, and I'm joined by Hans Albrecht, our options mentor, educator, and trader for our LaDuc Trading clients. And we come together every Wednesday afternoon and basically talk a little bit of macro, a little bit of micro, options structure. It's an Ask Us Anything format, so hit us up with what you're looking at. Make sure if it is a particular ticker that you're interested in, give us time frame. Like, everyone has a different definition of time frame. For me, it's chase, swing, trend. Obviously, short duration is chase, longer term trend. So you got to define those in your own way. But let us know so we're not just going blind here. And also directional flow. Today, we're like grinding a little bit higher. We get a little bit of economic data that comes in weak, like this morning, very stagflationary ISM services print with rising prices, but a little bit more contraction than was expected. We've been getting this type of hit, ADP as well, less than expected. We've got jobless claims Thursday morning, non-farm payrolls Friday, not expecting big surprises, but more importantly, the market just keeps shrugging it off. And I still see a market structure that's not falling apart. Breadth has expanded, it continues to. Buying is still in town. Liquidity, in other words, has not faded. I'm expecting it to. But basically, we need a macro trigger to interrupt the bullish flows. And Hans has a melt-up thesis. So we're going to hear a little bit more about why he thinks we are going to start triggering some FOMO and FOMO, which is the fear of materially underperforming. So we're talking about the funds, not retail, which is a small amount of money, relatively speaking, to big institutional dollars. So he's got a thesis that we could actually start this ramp higher. I'll believe it when I see it. But in the meantime, Hans, take it away. What are you seeing in the option structure, and specifically what levels are you looking for the market to basically get above so it can go with gusto?
Well, I think that 6,000 level is turning into the magnet that I've been alluding to over the last few weeks, which is this spot where you've got pretty nice, a little bit of gamma in there. It's a big round number. It's where a lot of people are probably going to want to do stuff, which is either get in, get out, and that can maybe have us sort of stick around that level for a bit. So I see this little bit of a grind up. You might be able to do things like butterflies built around the 6,000 level over the next week or so as we move towards that very big number. And yeah, like you said, it's almost like this market almost has like a kind of an almost embedded hedge of some kind where, if things are okay, then the broader market, MAG always does well, but the broader market starts reacting. And then when things go poorly, people push back into MAG for good reason. We saw that versus the consensus, we saw some really decent numbers from MAG 7. So it's always rush back into those trends, those secular themes that seem to just keep finding another inning, right? You think we're late in the game, but you keep finding another inning and adding more innings to that baseball game, and it just keeps going and going. So, and I feel like this is the next leg of that AI sort of story, which has been going on for a long time. We talked about it last week. We often talk about it, but this sort of AI will be really starting to get going around 2016, 2017, and then a little bit of a denouement there. Crypto blockchain took over, and then AI came back for the crazy 21 year, and then 22 was rough. And then, of course, ChatGPT kind of changed everything. So I think it set us off on this sort of next leg, which was really a couple of years of focusing very much on the training portion of things, which is, of course, going to benefit companies like Nvidia, the chip makers, the GPU makers that just can't sell enough of these things. And then with the news like the Saudis, UAE, it just really doesn't look like it's going to slow down very much at all. And it almost feels, I almost sense from what I'm reading and really anecdotally, just seeing everybody saying, this is the point where this is suddenly becoming useful. I can get what used to take me all week, I can get done by Tuesday. And that is really significant. And so I think we're entering into this interesting phase of continuing to build out, because I think that's still very important, because that's nowhere near done. But we're also part of the phase where I think there's a little bit more focus on inference. And I think that makes it for interesting opportunities in software, the snowflakes, companies that didn't even know. Look at Nvidia. Like, it used to make gaming GPUs. It didn't know about AI. It never thought that. Now it's in the right place at the right time. So I think you're going to see even certain software companies go, hey, this is something that we can make work for us. And I think that's going to kind of pervade throughout the economy, throughout different, whoever starts to pick up on that quickly. And it almost feels like there's a little bit of almost a panic. And I see the Google, everyone knows I'm a little bit negative on Google, and I love YouTube, and I think they're going to do well in cloud. I think they've got some great franchises, but search is under threat. And Google's really one of these companies that kind of sat around and just enjoyed their moat, floating around in their moat on a lake in the summer. You're floating around on your moat, enjoying your day. And now that moat has become a little bit of a puddle, I think, or it's heading towards that. And they're going, uh-oh, what happened to the moat? We better do something about it. And they are doing something about it. I don't think it's going to be enough, but remains to be seen how that works out. So I think they have all the potential in the world to make this work. But I sense that there's this kind of almost a panic out there to be a part of what's happening as this stuff becomes more useful. So I know I'm probably a little bit ahead of the curve here, but we are seeing Nvidia earnings came out, dumped at $10, and it's right back again. And so I've been adding some SOX because I do Nvidia, but I also like to be a little bit more broadened out a little bit in the chip space, because I think there are going to be opportunities across Internet of Things, different sizes of devices and things like that. So I think there's a lot of opportunity across the board. So I'm excited about it. And then I know I'm going on, but and then I think there's this, we look at flows, people just aren't in, right? The hedge funds, we were looking at the hedge funds, you were talking about exposure to the market, gross versus net. So there's a little bit of a difference there, but people just, retail's been right. Non-smart money, as they like to call it, has been right. And the smart money is sitting around waiting for some recession that never really materializes. And they've been playing that game for 3 years, to be honest. Everyone comes in and goes, well, this is it. This is the moment where the recession kind of sinks in. And has to come at some point, but it isn't yet. And so if you bring some of that money back into it, we can look at some of these charts, but there's money that could potentially come back in. Is the market expensive? Yes, but I think, fundamentals may not matter at this point if it is going to become a FOMO. Is that like an animal?
FOMO and FOMO, correct.
FOMO and FOMO. Is that like an emu? I like emus. And so I think there's this potential for people to go, uh-oh, and get back in. Now, I keep trying, and I haven't worked this out yet, but I keep trying to think of what are the economics of what's going to happen, which sort of is pointing towards massive swaths of jobs being eliminated. And I have my doubts as to how quickly people can retrain and pivot and do all these things. I hope I'm wrong. So I don't know where those lines get together and go, well, wait a minute. So I think that could almost be, if things are actually too good in the AI world, I think that could almost accelerate a move towards this known unknown, which is, I think AI is actually underhyped. As much as we just constantly talk about it, I think it's underhyped in terms of what it can actually accomplish for companies and people. But I think the other side of it is that the job threat is underhyped. And I don't know if it's underhyped or maybe people just are sticking their heads in the sand and going, well, I hope it works out. I hope it works for
they just don't know.
They don't know. And we don't know, right? We don't know. Technology, computers came along, unemployment pretty much remained low. The internet came along, unemployment is low. So we'd like to think that there's going to be this transition and pivot that's going to work out. So I hope that's the case. At some point, that known unknown may, if things are as good as I think they are from the standpoint of how things are accelerating, we may get to that point earlier. Market at some point will go, oh, wait a minute, what are we going to do about this part of the AI explosion? There's going to be a negative associated with it.
I love that you have a thesis. This is obviously I would say for the most part, you've been doing this for decades. So fundamentally at the core, fundamentally bullish and excited about AI for all the reasons and the climbing wall of worry. I am definitely more focused on following the flows as it relates to tactically being bullish, but I'm so, I guess the word is cautious because of the macro backdrop. So yes, they have a fiscal spending bill that is all gas, no brakes, and that is reason for the season also with this euphoria. But the trade wars are unknown, and that is definitely keeping a lot of money, as you put it that way, not yet deployed because it is worried about the impact. Only thing that's happened with policy intervention of late after the April swoon is that it pushed out the risk a quarter. So as long as the earnings were good for Mag 7, the market doesn't care because it's so heavily concentrated in that weighting. But for the most part, this is a time where I'm definitely tactically bullish, as I keep saying every time we're here, but macro bearish. And macro bearish means that yes, we're near all-time highs. We have the potential for a melt up. I did not see that potential when we were 6,000 back in January, and I wrote that hat. I said I will not buy the $7,500 SPX hat. We're going to 6,500, 7,000 tomorrow, and I just didn't see it. So we did start to have the selling underneath the surface that I could see, the breakdown in December that I could see. We don't have that right now. We have breadth that's still coming up and expanding off the bottom. It's nowhere near the highs. That's a divergence. Indicators that I have used in the past have been busted. That's also a kind of a telltale sign that we're mechanically driven higher, but not organically. And the fact that we have a lot of risk that isn't priced in because we don't know how to, because we keep expecting the taco kind of trade where Trump will retreat. And basically that is not helping CEOs in the here and now, and economic growth. It has contracted for a quarter. OECD is warning that it will contract further, both globally and in the US. Apollo comes out and says the consensus now is forecasting a slowdown in payrolls over the coming quarters, which is contraction. Prices are still extremely sticky and or rising, both manufacturing and services, while the activity is decelerating. So we definitely are contracting. So under the surface, we keep getting these kind of tremors of nothing big is wrong, but the market doesn't bend, it breaks. So I keep looking at not just the Musk rant yesterday, who's now putting the GOP on notice, right? That Trump's reconciliation bill is abysmal, or what do they call it? Disgusting abomination. Now, obviously, he went to war in support. He's broken up with his master, and he's having a breakup, a lover's quarrel or a breakup, which is worse. But the point is, the bromance is over. Bromance is so dead. Renewing Trump's tax cuts without cutting spending will impact debt and debt servicing. And honestly, the warnings that we hear from the bond kings, whether they be Gundlach, Druckenmiller, Dalio, Diamond, all of the greats who are saying, we have a problem. We don't even want the 30-year bond. We're just buying the short duration because we don't trust that this government actually knows how to get itself out of this mess. It just digs it deeper. So this is the type of situation where under the surface, we do have credit stress that has the ability to break harder. In other words, credit markets also, Apollo is saying, they have low liquidity against a rising rate backdrop is not a good formula. And they're experts. That is their market. That's how they make their money. So I look at the warning signs more so as a cautionary tale of don't get too fat and happy, trade it tactically. Everyone has their time frames, and also portfolio hedging for those who are bigger picture and or manage money. But I definitely don't think this is a time to get complacent. We could have a melt up. It only to me would be honestly a better chance for the tent to fold. In other words, a fake breakout fast failure would be a high probability in my book if we do have a melt up. So I am still of the opinion macro bearish, tactically bullish, and that's just the way it's going to be. And then I'm looking ahead at what's going to happen with some of the deals, right? The peace deals have died on the vine, which was a big premise to getting into any particular bond bullishness. That's gone. The trade deals, we've had nothing except with the UK, and they have a surplus. And then this particular tax cut extension, debt ceiling raise, has infiltrated all of these very unsuspecting provisions that we don't know about, right? They're just coming to the fore, like the Section 899, which is enforcement of revenues against unfair foreign taxes. That's actually a big deal. So trade wars are capital wars, and that one's a huge one. So I know you're very bullish, and I know all the reasons. 80% of the time the market moves higher, 20% it falls, and then gets bought and moves higher again. So for me, it's very much, these are reasons to be cautious into July, August, and the fall. Unless we get more policy intervention, read easing, there's no rate cuts in the future, maybe September, but they have been priced out for the most part because of a solid labor market still until we get news we can use, and rising prices. So we don't really have that as a backdrop. We just have good old consensus, right? Bullish bent and passive investing and lots of stealth QE underneath the surface. between Fed liquidity, Treasury short-term bill issuance, and then of course we've got the AI story. And it's the story that also keeps us engaged. And you're telling it well. So I understand why you're bullish.
It is strong, but we are starting to see some parabolas again. Remember, when we start to see parabolas, we have to take a breath, I think. We look at things like CoreWeave, and there's another one, Nebius, which I've been looking at, which is the old Yandex, which is interesting. It's like the poor man's CoreWeave. So there's some interesting plays out there, but CoreWeave has just gone kind of parabolic. And I think that's what markets do, right?
Yeah, but that's not fair. We can't use CoreWeave any more than we can use a penny stock. This is Magnetar sponsored. Anyone who doesn't know Magnetar, Google it. So they're the subject of all the great financial crisis. So I don't even look at that one. It's not a tell for me. That is a tale of grift for me. So it doesn't even qualify. I don't even look at it in my trading room.
You don't even talk about it there? Okay.
Nope, I refuse. Because it's not, what is the expression when Buffett is talking about poker and he says, if you don't know who the shark is, you're the bait?
Yes.
That is 100% CoreWeave. So yes, you can, it's the day trader's delight, but no. Otherwise, you can make money on all kinds of grift plays. Look at crypto and the whole universe of these treasury balance sheet driven, no-name companies that all of a sudden are relevant with high valuations and are getting day traded.
Right.
It's just not my jam.
And it always makes sense, right? It's always justified when it happens. And then Square trades at 400 times earnings. And then 2 years later, it's lost 80% of its value. And then we go, oh, wait, valuation was important. So there's no question. It's easy to get caught up in the manias. I think valuations, if you look at least the larger names, really aren't that expensive. I was looking at MAG. MAG's different. These are different things. CoreWeave is not Nvidia. So there's definitely a little bit of exuberance out there. MAG isn't that expensive. It's versus the S&P 493. It's at maybe about, well, its average is about 43% premium, and that's where it's at. So it's
really base your trading on valuation, because I know I do not. I don't short it based on it. I don't buy it based on it. So your hood, for example, is hot fire flames because it's getting included potentially in S&P and other reasons, because Bitcoin is bid or because it's transaction based and going into gambling, whatever the reason. But the valuation is whacked. So is it for waste management. Walmart, Costco just had a great earnings report. It's ridiculously priced for valuation. So I never look at valuation as a reason for the season as far as a trade is concerned.
Oh, I think that's very fair. And I do look at it. I like to look at those measures just to get an idea of how much more crazy can things get, right? So I like to look at, it's all kind of relative, right? If everything's trading at crazy levels, well, then that's the regime. And that's the one that you trade around and you look version to the mean and things. But you're right. It's about story. Some of the stories are strong, and then the Netflixes and the Costco's and maybe AI now again is picking up on that. And so that's what we're going to play. But
we also talked about, for example, ARCAT this morning. You and Mike both own ARCAT.
I do own it. I've been riding it. I bought it at 5 1/4. I watched it go to 8. I didn't do anything. It went down to 460. I didn't do anything. I'm in the not do anything. It's just watching it sometimes it's a train wreck and sometimes it gets me excited. But look.
But that's what I mean. We have very different styles, because that is, again, a day trader's delight, but it's not something that for me is a viable play. If you zoom out, I have to show you this because I understand why it's exciting. And then we got to go answer some questions in here because we're getting lots of questions actually about stocks. So we can look through that. I actually posted, this is ARCAT. And by the way, anyone who's not familiar, I run a live trading room and I always have it on different time frames, an hour, a day, and a weekly for those who are more chase inclined, swing, or trend. And this is obviously a beautiful pullback that has just tagged the April high. It really needs to get back above 846 to trigger more. But now, and it has a nice inverse head and shoulder. So for example, Mike, my live trading room coordinator, one of our coordinators on the desk, we've got 10 in total. He is long and strong, the flying taxis, drones, the quantum, very much so. And he's long this. And I know that you are long this as well. But if you look back, okay, this was $20,000. This is a plaything. So I understand it has a new life, and it's gorgeous, by the way. If I didn't do this, I wouldn't ignore it completely. But because I do that, I'm like, yeah, that's somebody else has control. I don't have control over that. It's not thick enough. The options are too wide. I get really picky. But
Yeah.
someone else in the Q&A is saying ASTS, which is one of my picks. It had a big 13, 14, 15% surge today on some news that was really, I didn't even notice it because to me, this doesn't matter. This is a big picture play for fundamental reasons. So I really like this name it's the anti-Musk. It's a competitor of Starlink and its satellites. And it is not something that's on many people's radar because it's also pre-profitable. Anyway, long story short, this does not excite me. Like I ignore this because I think this is going to be bigger picture, longer term play for fundamental reasons. And it's coming from here, right? Anyway, I look at this and I see, okay, I know people get excited about a 15% surge, but I wouldn't be surprised if it's right back down. This is going to be a while. But I have the fundamental confidence in a name like this to stick with it. Hopefully that makes a difference. You're playing RCAT because it's hot.
Yeah, it's small. It's a small position. I'm not going to lean into something like that. But now I think we both acknowledge that we try to look for, you have the different time frames that you look at, but I always try to feel out for where a trend might have a little bit more durability to it. And so I think this leg of AI, whatever you want to call it, I think there's some durability there. I think this Russian attack represents a changing, you wrote about it today. I think the game has changed. I think it's actually very concerning. I think what happened is quite concerning. It should be very concerning. And I think it's going to probably start to push money into military technology, things that are going to plug up the holes, which we're going to see. There are going to be holes. I think that comes with technology. And I think, I'm not saying it's going to be easy. In technology, there's going to be disruption, moats that don't exist anymore, and companies that are in big trouble that probably had very solid businesses. And technology, quantum, I can't even think about what quantum's going to do. So I'm going to stick my head in the sand on that one. But for now, like with these drones and the ability for them to do what they did, it just highlights that anybody is vulnerable in that area. So I don't know if RCAT is the right play, but that could be something where you go, you know what, maybe it has to be a Lockheed or a Northrop or something like that. Yeah, something
I actually posted this because you had someone asked in the channel, you were talking about it. All right, just as an example for those who are looking at. All right, so for me, I have to do this as well, right? This is boring, this particular Lockheed play. It's very boring. It's nowhere near as exciting as RCAT or even chasing Nvidia for $3. But the point is, if you put it on a monthly, you can see that this is up and to the right. It starts to get very volatile. This is on a monthly, so you really got to be able to withstand some drama. But every time it comes down to the 50 moving average, EMA, I should
like
say,
that.
Look at that, beautifully tagging. So this is, I know it's hard. Let me show you better LMT. Long story short, this is on a weekly. It needs to get and stay above 508 and it's back in trend again, right? So every time it comes down into this 200 week or the 50 month, it gets defended. So if anyone is looking at a longer duration play, you can see the history, right? It came down hard into the Trump election because there was expectation there'd be a peace trade, a forced armistice between Russia and Ukraine. How's that going for him? So all of these government contractors took a header. So now they are really digesting. Raytheon obviously is the leader of the pack, but we were just talking about Lockheed earlier today. So that's why I'm showing it, because on a monthly, you can see that this is a gorgeous trend. Volatile, but it has a up and to the right 45-degree angle feel. So anyway, that's the kind of difference between a trend versus a weekly. Some are just going to want to play this to 508 from 480. Okay, fine. That's a swing. But I think that's the difference right now, is we're looking at how to play some of these defense plays, not just Mag 7, and they're not as exciting. People don't want to really trade Lockheed. Or Boeing's okay. Boeing's come up from the ground, literally from falling apart and staying fallen apart, and now it's coming up off the runway and looks very poised for higher. So that's also one. So
yeah, people just want to trade the exciting stuff. It's amazing. They don't even want to trade Nvidia or AVGO. They want to trade SOXL. And I saw one the other day. It's a 4 times levered. I think it's listed in overseas in the UK, a 4 times levered. And I thought, well, why stop there? Just go 10 times and let's call it a day. Let's make it 10 times levered. It loses 10% and it's done.
No, not all people. Come on. CEOs even though Zero-DTE right now makes up what, 62% of the option flow on a daily basis, CEOs are not making their decision on an 8-hour day of what happens in that period of time. So it's a lot of hedge funds are also hedging with Zero-DTE, which you can't focus on the big picture. You can't do the macro trends with conviction. I guess you can, but the point is that's not my game. So I know, for example, right now you have a melt up thesis, and obviously that is going to support in large part the balance sheet heroes, as you call them, the Mag 7. But there are other stocks out there that are coming off the bottom, getting chased, or look like they have a durable kind of trend reversal in play, like a Boeing, or a pullback to support like a Lockheed. There are other players, is all I wanted to point out.
No, there's stuff going on. And look, I'll say that before we had the big sell-off, I thought we were probably going to 63, 6,400 as well. And then I jumped on board with you to get negative just under 6,000. So
all right, let's answer some questions because we have a few. First of all, let's see. What is your view on Crowd? It just had earnings and it had a huge negative PE. I didn't notice that.
Well, it just doubled off the lows, just about a double, which is pretty unbelievable. I think the idea is the world isn't getting any safer, right? So Crowd, I wish my Palo Alto would do the same thing. I'm on the wrong horse there, but I think those are interesting. Again, I think it's an area where there's going to be some disruption as well from AI, but I think Palo Alto is doing well. I don't know Crowd as much. Samantha, I don't know if you know that one as much.
All I know is, and I'll just kind of show this real quick, this is something that I posted yesterday actually in Trading Room Notes, that it was reaching, I don't know if you can see this right here. Okay, that was a bull trap. It was very hard for me to believe that this was going to power higher in the same way. I don't believe Avgo is going to be powering higher after earnings tomorrow. So
it's rallied hard. Yeah, it's rallied.
Yeah, it's ran into earnings and then it will pull in Nvidia. Nvidia was a little bit easier with that premium selling trade because it had already run from 96 to 136. Crowd has, I'm looking on a weekly because that's how I judge first and then I go inside. And it did exactly that. It came right back down to the 21-day on the daily, came right back down to the prior breakout on the weekly, which is back here in February. So this, however, is a bearish engulfing. Very likely it's going to head down to the 10-week and we'll see then. But I didn't realize it looks like it beat. It guided well. It has 1 billion in stock buyback. So a little lighter than the guidance was a little bit lighter than expected, but otherwise, but I am still not going to short any stock at all-time highs or buy any stock at all-time lows. And Crowd has done a great job of recovering from the blue screen of death when it lost 50%. Remember that? Airlines were down.
I remember that. They said it was done. The competitors were going to grab the business and it just proved everyone wrong.
Yep. This was earnings, which is typical. It gets too far. And Avgo has a very similar look, by the way. Avgo has just doubled. Okay. And here's the mean down here about 220. So, and it reports after the close tomorrow. Wouldn't surprise me at all if it also creates some volatility in semis, because it's now Mag 8, right? Its cap weighting is big enough for it to qualify as a big player, but I think it's too much, too soon. And this also has a really good likelihood of having a premium sellers type of approach for an earnings play. This, if you remember, it was post earnings, it was hot fire flames, and it stayed here for a few weeks until DeepSeek came in and deep sixed the semis. And then, of course, we had the trade wars, and then we had just the abomination of how the bond and credit markets froze, and then they had to come in with intervention. And so I'm showing you on a weekly just to also show you the expansion candle off of a key level of support, which happened to be monthly and the 100-week. They're great places to sell puts to see how it's going to reverse. Anyway, long story short, this is really extended. Same thing with Crowd, just really extended. I think the market got a little ahead of itself and it needs to come on down.
Yeah, the Palantir's had trades at crazy valuations. I think people are searching out for these pure plays as well in the AI space, so that one of those considered a very pure play that can benefit from all kinds of companies and industries needing help in that area. So those kinds of stocks are going to get the crazy valuations. They're going to have the parabolas. I did want to show one thing, Samantha, because somebody talked about ASTS earlier, and I thought this might be a good learning moment. You could see my
you're on
charts here, my
ASTS. I love that.
Yeah.
Let me just answer Kevin's question real quick. You have to look. I have it in trend, Kevin, and it is actually a bull risk reversal for 2025, 2026. So anyway, it's posted in there. Okay, go ahead.
You know what? I looked at one of those risk reversals on Crowd and I said, I'm going to wait for it to pull back 10 or 15 bucks. And it just didn't. It would have been absolute gold. And I just can't bring myself to do it up here. But it would have been selling maybe a downside vertical credit spread down in the 70, 75 range to finance maybe an upside call spread. When you sell those vertical, if you just sell a put, you're going to get all that premium and you've got more to put to use to the upside. But if you sell a credit spread, then you're really not getting very much. And you end up usually grabbing an upside call spread because that's all you can afford. And you probably usually have to pay extra as well. So, but it's a nice way to create cheap upside leverage for relatively small debit. But
okay, and it's out in time. So this is
you give yourself time. Exactly. And I did a trade like that on, people will be shocked to hear, but I did one on SOXL. So I'm talking about these leverage products and I've been
Shame on you.
I've been talking down to them for months and months because I think they do get people in trouble. One of the main reasons is as the option seller crowd, the theta gang out there, everyone's always, okay, you can make this every month. And of course they kind of gravitate towards the SOXLs and the MSTXs because they have those really juicy premiums. Now they're juicy for a reason because these things can move around. But at the same time, you have that leverage decay, which is very important. Most people don't even understand that it exists. And if you look at a chart of SOXL or MSTX, which was down like 90% at one point from its highs, you'll understand that something more is going on there than just the leverage. So these things get chopped up by lots of movement. And so it's counterintuitive, but I usually tell my mentoring students, I say, listen, resist the temptation to get in until you really are feeling good about an established trend. Because as long as we're in a realized vol movement, and what that means is up and down and up and down and false starts, false sell-offs, everything false, that is going to lead to this kind of leverage decay because these products have to add their swap products. So the person running the underlying strategy has to add, in order to get 3 times performance tomorrow, they have to assets to that. So they can only guarantee you 3 times for one day, roughly 3 times, but they cannot guarantee it over many days. And what happens is they end up having to rebalance, and that can hurt these products. So where the option sellers get things a little bit wrong is just when those premiums are very high is when you probably don't want to go near those products. Now, when you finally can potentially establish a trend, and you probably don't want to try to pick the bottom in them, but when you think that a trend is going to emerge, then these products can absolutely perform. If you can catch a big run in semiconductors or a big run in MSTX or MSTR, then this thing is going to really do it for you. But that is when the option premiums actually compress a fair bit. So it's this sort of counterintuitive world, but they're very interesting, but they're really uniquely for specific situations, in my view. Now, the thing I wanted to bring up is someone talked about ASTS, and it reminded me of, I had a session the other day and somebody said, oh yeah, I was in this trade and I did a poor man's covered call. So if anybody doesn't know what that is, it's instead of buying ASTS, you can go and buy a longer term option, a longer term call on it instead of spending. So for example, if I showed you Nvidia, you can either buy 100 shares for $13,000 or $13,500, wherever it is right now, $14,000, or you can buy a longer term call at around an 80 delta, and you can spend maybe 35-40% of what you're going to spend on the stock, and you can create similar upside. So if some people who don't have maybe a larger account and don't want to, if you're trading a Netflix, it's really hard to do an option trade on it. It's $1,000 stock, $1,200 stock. You need a whole lot of money to do just a one contract, right? So what people will do is these poor man cover calls and use leaps as a way to create that upside exposure. But then what they'll do is they'll try to generate, this is a very popular strategy, while they own this upside via in the money 80 delta call, they will sell shorter term calls in an effort to pay down some of the time premium that you have in that leap. So you're saying, well, I think I like ASTS. So let's give the example of ASTS. I like ASTS, but I'm saying that I'm going to sell some shorter term calls against that position because I don't think it's going to go up right away. Maybe it's going to take its time and sit around for a month. Well, you're sticking your neck out there a little bit. And so they brought this position to me and they said, well, I was long a longer term 30 call on ASTS. And they said, we're short some, I don't know what it was, June of this year, June or July of this year. And I said, you got to be really careful with that because you're long a 30 call that expires a year from now. It's got $8 of time value in it. If you sell something shorter term, that effectively, if you get run over, if the stock goes up and you sell a June and you sold a 32 call for $1.50 or $2, well, you're locking in a loss because you're effectively, if you think about selling that 32 call against your leaps, you're basically agreeing to sell that stock at 32 plus the $2 that you got, right? So you're basically selling the stock for 34. But what if you're selling the stock at 34 and your 30 call is worth $8? Well, you're locking in a $4 loss. So I said, be very careful with these poor man's cover calls. Everyone thinks it's just this easy formula. You buy these long-term calls and then you just keep selling all this. You get all this free money in the meantime. Make sure you do the math. And I'm not saying it's wrong to do it. So I said that to the student. I said, listen, this isn't wrong, but you got to be on your toes because you are making a call that you like ASTS or that you like Nvidia or something like that. That's the reason you're buying a longer term call. And then you're actually getting in your way by selling a shorter term call. And if you screw this up, you're going to actually lock in a loss. Or if you end up getting assigned in your short stock against a long leap, long a really expensive put now on a stock that you liked. So you turned it into the complete opposite of what you intended to do. So either you do these where the math doesn't make sense. That's where the math doesn't make sense. You're long something for $8 that's going to get you out. It's going to guarantee a $4 loss if the stock goes up. Either you need to be fast in covering that position. You need to absolutely, when you put that position on, you're going to say to yourself, if this thing hits $34, I am covering this call or I'm going to turn this into a real mess. Or what I prefer to do is instead of buying an out of the money call, I may own an in the money. So I may own the 20 call. That's going to cost me $12. So let's do the math on that. So if I buy the March 2026 ASTS, $20 call, it's going to cost me $12 and say 75 cents. Well, what's my break even on that? $12.75 plus 20. I need this thing to go to 32.75 before I technically am going to make money, right? Because there's time value in there. $20 plus $12.75 means my minimum where I'm going to start making money on this at expiry is $32.75. So now I have a beacon that I can look at and go, well, if I'm going to sell a shorter term call, I better make sure that I'm going to get at least the strike plus the premium on the short term call has to be above $32.75. So that if ASTS comes out with news tomorrow and somebody says, we're taking over this stock at $50, at least you're going to make some money. Upset because you should have been just long the call, but you're at least going to make some money. So I thought when you mentioned ASTS, I thought, oh, wow, I just talked about this with somebody. Be very careful with these poor man covered calls. Do the math, figure out what your break even is, and then use that to inform what strikes you're going to sell if you do want to sell shorter term calls. I'm not saying that's wrong to do the shorter term calls. You just do it right, or at the very least, you better be ready to move your feet
Manage
if
it
it goes
actively.
against you.
Yeah. And speaking of crowd and ASTS, it's interesting because ASTS is not profitable. It's pre. So it has some work.
So the takeover is not happening?
No, there's probably not for a little bit. But crowd is negative PE because of the big hit, the blue screen of death, where it imploded 50% in liability and losses. So it's basically bid up on future profitability. The forward PE isn't negative. It's 120 something. Okay. Forward PE is like 123. So it's working through, let's just say, a whole bunch of future hope hold forward in that price. So that's why I think it's going to succumb to a little bit of pulling back down like an Uber. It starts to get 80 to 100 stock and then comes right back down to 80. So it's still working it out. Perfect.
I sold some Uber. Samantha, I
you
sold
did.
some Uber.
I know.
I said, you know what? I got to sell some because and I'm holding some and I'm thinking maybe selling it all and then just replacing it with some upside calls, just have some more defined, smaller risk.
I still like it a lot. I think it's going to be fine. All right. So then Palantir, I've got to show you a Palantir stock because he's asking about it. And I think it's a really good poster child here for the melt up thesis that you have for the whole market. God, I hope not. So, and here's why, because melt ups always trigger a parabola. Parabolas are trapped longs and any volatility triggers liquidation. So just keep that in mind. Parabolas are not trapped shorts. They're trapped longs. So this is an example on Palantir. Let me just show you because T is asking about it. All right. So this is a cult stock. First and foremost, I'm not getting in its way. So this is on a monthly again, and you can see these red lines are basically the monthly pivots I use and you can see has done a beautiful job of getting above all the moving averages that matter with Nvidia back in May of 2023. So it is completely part of this AI ecosystem. And it did a great job of staying above everything that matters. And then it started to pick up a little bit more speed, basically after this whole yen carry trade drama. And then you saw what happened into the end of the year, because it's Trump and Musk and Karp and Thiel and all these guys are all related to this Trump bump. Then it goes parabolic, and it is now rising on a monthly. And I do this on purpose because it takes away a lot of the noise from the daily charts, even from the weekly charts. It's still in trend. Look at this 10-week. Look at this. It's ascending, very strong trend. Then we had a big shake and bake with the most recent pullback, February to April. And then we also had it supported, extremely well supported, by the way. This is a stock in trend. The problem is it's extremely extended. So we've got a new month. April was very productive for Palantir. And then, of course, May had a very nice follow through. It's just sitting here on top of the prior breakdown. Extended. It's wicked extended. The mean is basically the 10 moving average of the chart, whether it's on a monthly, whether it's on a weekly. The mean is down here about $90. So I know why you want to short it, because you're waiting for that breakdown. But it has to break 125 before it can get to 118. That will be a channel. It has to break 118, and then you've got a nice big air pocket of risk back down to 98. Now, it's not ready. I don't know how else to put it. So this is what it looks like on a weekly. It's a lot more choppy, right? So this is where it got defended very firmly when Trump came out on April 9th and gave this 90-day reprieve for the trade tariffs. Remember that? So here you go. This is a very bullish engulfing, followed through. This is a 10-week, by the way. Now I'm using the 10 on a weekly instead of a monthly, and you can still see how quickly it got back above. So anyway, I don't know if this helps you on your thesis. This is a story stock. And
how do you want to short it? I'd be curious. How do you want to short it? That's the thing. You're not going to short the stock, right? You're thinking of.
This is a question in Palantir, one of my favorite shorts. Now he obviously he plays it on a shorter time frame. I'm just giving you the kind of the pivots of what I would look for to get it back inside. Same thing with Carvana. There's another question in here about Carvana. Perfect example. Same deal. You can't short this rate yet, but now it just hit a monthly. I know Carvana is an Apollo. First of all, this is something I've been on early and often. I said if it gets above 56, it's moving and it's going to be beautiful. And Apollo is the debt financing. The father came in and bought shares. The grandfather came in and bought shares. So this one's been on my radar since very low. It went all the way down to $3 and change.
I remember that, yeah.
Okay, so, but it was a great short here before earnings. That was a monthly pivot. So I do like monthly pivots. And then, of course, this is policy intervention. This is April 9th. This is when everything stopped going down because Trump delayed the tariffs. Now, you've got 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks of green on the scene. This now has a lot of calls coming in, and I honestly don't know if they're being bought or sold, but that would make a lot of sense to me. If you're doing selling a call spread up here of 350, 370, or even selling the 370, maybe I'm dead wrong and they're buying it and I'm embarrassing myself. But honestly, this looks like a great mean reversion trade back down to this 286. But it hasn't triggered yet, and earnings aren't until end of July, so that's out of the way. So long story short, I don't know what you're going to do, but I'd wait.
Yeah, I'm looking at the skew right now, and it's not crazy. It's not looking like before I looked at it, I thought this is going to look like parabola skew, which tends to be everyone's rushing into the calls and they get really fat. And they're not. It's very well balanced. It's a strange, orderly rally in a way from an options, from a volatility perspective. So it's not very expensive. The options aren't even really that expensive, which is interesting. If you look at CoreWeave, they're very expensive. Palantir, Carvana. So if you did want to play downside in some of these, the options are really not that expensive. I'm looking at Palantir, and this is true across the board. A lot of things are cheap. I showed the ASTS earlier. Some of those longer term options are actually quite cheap. They've never been as cheap as they are now. So from the perspective, somebody was saying, I think somebody was asking leaps on ASTS. They're inexpensive right now. So I think it's actually some of the things that I've been doing, and I've started a little Leaps AI portfolio, but I have a regular Leaps portfolio. And I think it's an interesting time. If you do think there's some upside in some names, they're not that expensive if you go out to the 12 to 18 month mark.
Yeah.
which I think is cool,
But I
which is
also
a
think
nice goal.
a name like ASTS needs a whole bunch of time. It's a chop fest. Has a high
Yeah.
short interest. It is whack-a-mole. It needs to get above that wall where shorts keep tapping it, not tapping it, beating it down before it's going to explode. So that's why it's more of a position trade with leaps, waiting for that to happen. I've been talking about this since late last year, and it's gone nowhere. But it also didn't fall during the February to April. So my point is, I have very
It didn't,
different.
eh? Yeah, you're right. It came, what did it do?
It
It
was
came down.
fine. It was fine. It has gone
It did
sideways if you
okay.
look at the big picture. But for me, I don't want to get stuck on that. We look at everything, but that's just an example of it hasn't gotten above its level that's going to make shorts cover and shoot this thing higher.
Right.
It's an exercise. It's not a Carvana, okay? And it's not a Palantir. Anyway, let's go on to some questions. Jobs on Friday is good news. So the question is good news good for the market, or bad news good for the market, bad job number equals rate cuts, and vice versa. So Powell's made it really clear that they are just not in the market to succumb to Trump and Besant saying cut rates now. They're not going to do that. They're also seeing a stable labor market. So this would have to trend higher. They are never, repeat, never proactive. They are only reactive, and they need a lot of data. So they're not just going to be one and done unless something starts to break, unless they see signs of something breaking. Again, credit and bond markets, they'll come to the rescue. Equities, not so much. So I think for the most part, it won't matter. So it'll still be a dip that gets bought, and we grind, in June. FOMC is going to be a nothing burger. Bank of Japan, also likely nothing. And then we get really through July. There's another FOMC. August, there is Powell at Jackson Hole. And then September is, I think, the first chance for an actual cut. And the market's already pricing out, in, out. It doesn't matter. Trade wars, in, out. It's all headline driven. Long story short, I don't think it matters except for a few percentage points until jobless claims get and stay above 267,000. Just trust me on this. Once we get, and we're not there yet, and I don't mean just tag and come back down or do 260 and come back down, but once we get and stay above 267,000 in jobless claims, we will start to trend higher. And then the rate cut mantra can start to come in because recession risk will start to get pulled forward. We are not there yet. We're still 222, 240, but we're not trending higher. Fed is just not going to show up. And then on AI, yes, we're both concerned about it, right? When do those jobless claims come and hit? Kayla Scanlon, by the way, she used to work for me years ago, which is just, I love that she's made it huge. Said that recent college grads have a 5.8% unemployment rate. It's hitting Microsoft. But guess what? That just means it's going right to their bottom line. So when Microsoft is letting developers go because AI is replacing them, it makes them more profitable over time. So that's another reason we have to, it's a mixed bag. So potentially makes that moat even wider. Then Thomas asks, curious about VIX in relation to possible equity reversal. I've got 1550. Thomas, I wrote about that for clients a few weeks ago, and the macro backdrop, July, that's when I can see absolutely a potential for VIX to start basing and moving higher. And we do have seasonality coming in for September. VIX is in a channel on weekly since December. Yep, hitting and bouncing. It's making a higher low, and we do have, that's it. So basically, I'm waiting for it to actually fall into about 15 and a half, and then it should base and start to move higher. That's my read so far, and it's
there's
working.
really the stress. Like if you look at the VIX futures curve, it's in a very happy place. We've talked about this for a couple of weeks now. There's really not much worry out there structurally in the VIX, and when that happens, it's very difficult for the VIX to get going for very long because structurally, that's what makes it difficult for the VXXs and those long vol products. Just have this sort of pushing a boulder up a hill. Basically, they have this sort of headwind as opposed to a tail. So the SVXYs have a tailwind a little bit, even though they've obviously been chopped up quite a bit. But in this environment, until a shoe drops, it's probably going to be just buy the dip, which is what I've been saying for weeks now. And that's what happens. And even on news that we feel is a little bit somewhat serious, we're just shrugging it off. We did get down to 57.50 or whatever it was. We did get down. It was a little bit of a sell-off, but just the buyers came in, right? The buyers who didn't buy at 5,300 just said, hey, I better start getting in. So I think we just continue to grind. This whole tariff thing has become like, instead instead of a slugfest, it's more of a slap fest. They're slapping each other a little bit. It's really come down in severity. And so I think the market just is getting desensitized to that a little bit.
Thomas is also asking about some German defense plays, and I think
Rheinmetall. What was it
yes,
called?
this is actually client Ann's trade. The most popular we know of, EWG, which is the German index. They are throwing money at defense, so therefore spending more. And this is what happened. Fascinating with EWG when it came back down, and then boom, we will not. First of all, it broke out on Trump saying we're going to pull back from NATO. You're on your own, and then it came back down. Talk about monthly support. It was just amazing, and then it broke above all-time highs. So this is very similar to that one that I just showed you, which is the Rheinmetall. And then he had another one, which was EU something. Yeah,
What
this
about
one.
India, Samantha? Do you like India?
EUAD. This is the German, or I should say the Euro stocks, aerospace and defense. Yes. So those trades, that's why we were looking at stuff today, right? So we were talking about Lockheed. We were talking about the one that you have there, RCAT, which is drones. We were Boeing, which is aerospace, ETF, which happens to be a swing long that I've recommended. And then ASTS is not related to aerospace or defense, but it happens to be in the space. So those are some that we were talking about. What were you saying?
Oh, India. I was asking about India. India looks like, because I think that's been interesting. I've always felt that I own some, but it's a kind of an interesting place as a sort of next country to do a China, just given that China's kind of aging and India's kind of in that nice sweet spot of younger folks and very educated, very, very ambitious as well. So I think India is an interesting place.
Only if they're going to spend money is it along. Only if they're going to do fiscal spending. That's the reason they come here for the US market, because we're hand over fist. And that's why they're going to Germany now with the higher yields and defense QE. So honestly, I don't see India doing that anytime soon, if truth be told.
VIX breaking down, yeah, to Thomas's point, yeah, I think probably it does. I think it probably
And then you
does.
said also bonds right now are soggy. The 10-year yield is still, in my opinion, going higher. But right now we got a lot of recession vibes in some of the economic data of late, which is, we also had end of month last.
I bought TLT, Samantha. I sold it at 100 like many moons ago, and I finally bought some for the first time in a long time. I think it's just maybe closer to the bottom. I know the long bond isn't as popular as the shorter maturities, but I think we do see pressure on inflation over the next year, and I think the market's going to pick up on that at some point, and then we're going to get some rate cuts and roaring 20s until everyone loses their job. That's always my but.
Oh my goodness. All right. Well, I'm definitely not a bond bull at all. I have a short term, I'm getting asked about XLE and XLF. I have a very short term bent on crude oil going higher. And then I'm very bearish. In other words, 40 to 60 handle on crude. Dollar yen is chopping about as gold is moving higher with silver. Those are still in trend. And that's actually going to be a big deal. So I think right now we might see some retracement in gold and silver if the market really gets the animal spirit vibes and starts shooting higher, NASDAQ's kind of thing, the rotation, money flow. Otherwise, I think gold and silver are going to be quite all right. And we'll see some distribution in the equity market. So right now that is definitely in play. Dollar yen, if it breaks 139.39, that's still a really big bearish level, but we're not there. We're like 145. XLF has a big old head and shoulders on the weekly. Looks like a rollover. It didn't help with ADP and ISM, that's darn sure. But big picture, we're waiting for July. There's just not a lot of activity in June. We have earnings starting up again. We have corporate buybacks. The blackout window goes into effect June 16th, which is around that FOMC time. So guess what happens? We start to get chopped, volatility into OPEX. Definitely after June quarterly options expiration, we can get some more volatility. But until then, Hans is bullish. I'm tactically bullish, but not macro bullish. So I can't get behind strongly rising bonds. I think they're only good for a trade, and I am still sticking to whole kind of concept of contraction and rising jobless claims into the end of the year, which is not bullish. I think that's it. I'm going to wish everyone a great afternoon, and we'll be back here next Wednesday. Hope it helped. Thank you so much, Hans. Cheers.
Thanks, everyone. Thanks, Samantha. Bye-bye.
Bye.
Subscribe to LaDuc Trading YouTube channel for more macro to micro options power hour and other content.